Hello, everyone. Welcome back to How to Trade and Switch Markets. I'm Shane Vernier, and this is NFP Live. Today, we're going to cover the U.S. jobs report. We're going to nail down our expectations. We're going to look at the key markets. We're also going to get into exactly how to trade this madness. I had a great dialogue with a trader earlier today from the East Coast here in the United States, and they were talking about reversals. Shane, what do you mean? You talk a lot about reversals and rotation. Well, NFP oftentimes gives us a great opportunity to identify a news-bound range or a news-driven range and then play a reversal off of that range. So we're going to talk a little bit about that concept after the NFP report drops today. We've got some expectations lined up. We've got some price action that really has worked against us on the dollar Swissy. Let's get right out to price action. And as you can see, this is sort of bad news. This is Bad News Bears, if you've ever seen that movie. U.S. dollar Swiss franc. I had this trade idea out earlier this week, and you can see we lost it. And the reason why, there's two reasons why. Number one was FOMC Live, and number two is going to be sort of the precursor or the lead up to this NFP report. And right now, guys, the bottom line is this. The dollar's on the march. Dollar index is back above 100. A lot of bids are flying into the dollar. Why is that the case? Very, very simple. Interest rate expectations. Interest rate expectations. Everybody in the world, a lot of folks said, oh, we're going to get a bunch of rate cuts in September. We've sort of been out in front of that saying, hey, you may not get them. Right now, the odds are about 60-40 that you don't get any rate cut in September. The Trump administration's going crazy. They're calling for the FOMC basically to have a mutiny against Jay Powell. I think it's fantastic theater, and it also makes for great trading. So I want to welcome everybody back to the room. We got a full house today. It's always great to see all the names. We got a lot of new names, got a lot of old names. Just out there in YouTube land, good to see you. Gordon Williams, good morning from Dallas, Texas, going into surgery today. All right, go Mavericks, go Cowboys. I'm pulling for you, Gordon. You have a fantastic surgery, and best wishes. Let me see. I'm terrible with names. Shohajan, good to see you. X-Light, good to see you. Goat, good to see you. Goat, always a pleasure, guys. Joseph Fury, Okello, good stuff. I do Fueco, Cherish. Oh, man, I'm terrible with names. I've got to learn how to pronounce some of these things. Ipmuling, Batista, good to see you, Batista. Ahmed, good to see you. Update News Official, right on. Lita, always a pleasure, Lita. Lewis, we got a lot of old friends in the room. JC, Bobby Bob, good to see you, Bobby. Steve Francis, guys. Fantastic. Wizard Alvin's joining us from way down there in New Zealand. Good to see you, Wizard. I'm glad you stayed up late or got up really early. Depends on how you look at it, right? If you have any questions at all, be sure to throw them in the live chat. What's my prediction? That's the first question. Goat, what's my prediction? My prediction's very simple. We're going to get some volatility and some price action. I have no idea. ND here from Latvia. Yes, sir. Good to see you. Truly a global community. Sarah Alran, what are you looking at for gold? We're going to cover gold here in just a second. I do want to get started, though, with a little bit of fundamentals here, and we're going to go ahead and make these about as quick as possible. Remember, we're not economists. We are traders. Dave F19, good to see you guys. Okay, here we go. But remember, if you need a broker, bring your ambition into focus with Switch Markets. Thousands of markets, low commissions or zero commission accounts, actually tight spreads, and that's what you need to trade successfully, at least if you're in the Forex and CFD markets. If you're in the United States, you need a futures broker or you need a Forex broker here in the States, reach out to me via private message. I'll do my best to line you up with some of the folks that I've done business with and also some of How to Trade's recommended brokers. So good to see everybody. Let me see. Foxy, hello from Belgium. Good to see you. Fox Cree, excuse me. Good to see you. Let me see. Sarah, are you bearish or bullish for gold? Well, I'm neither. I'm going to show you some key levels for gold to watch. All right, guys, NFP, Friday, August 1st. It's a new month of trade. What is NFP? It's just the jobs number, guys. All we're looking for is the number of new jobs created, and remember, that needs to be going up to show economic growth, and there's a couple of different things that does for us as traders. Now, remember, the number itself does not matter. It has to be put in context. If it is not in context, you're really going to struggle to trade this thing successfully or understand what it means. We do things on a relative basis. We're going to compare it to the previous release and our projections, all right? That's all there is to this. Remember, this number that comes in, it's either going to be above or below projections or above or below the previous release. It's not really worth getting too much into detail other than that. What does NFP do to the Forex? If it's above expectations, what happens? Bullish for the US dollar. If it's below expectations, what is it? Bearish. Why? Because if we're high, we come in with a hot jobs number. That means economic growth is there, and the potential to raise interest rates or hold them steady is going to drive the USD higher. That's what we've seen all week long. Very, very, very bullish USD. It really has put the screws to a lot of different assets. So we're going to be watching that one closely. What happens to equities and commodities? If it's above expectations, it's going to be bearish. Why? Stronger dollar drives the value of your stocks and your commodities down. Why? Because dollars are worth more. People don't want to part with their dollars for a share of stock necessarily when that dollar's worth a lot. Bearish. So a big number today means we're bearish. Now, if we're below expectations, if NFP comes in really low, then you're going to see potentially a rally in stocks. You're going to see a rally. You're going to see the U.S. dollar come off, stocks go up in commodities because rate cuts will probably be the answer. Got to jumpstart the economy. U.S. non-farm payrolls, here's what we're looking at right here, 2025. Man, it's already 2025. Previous 147, we're projecting 106 today. Unemployment rate 4.1 to 4.2 projected. That's it, guys. We think that we're going to get a bad jobs number. That's what the markets are waiting on. Sort of interesting stuff. Unemployment rate. Jay Powell said this the other day at FOMC Live. 4% is the Fed's benchmark. As we get above 4%, the Fed gets nervous. All right, that's enough fundamentals. Let's get out the price action, see what we've got. Let me see memes. Going to see memes. Titona, XAU will be bullish. All right, funny bone flicks. I'm going to buy. All right, guys. You guys, whatever you want to do, just remember, trade these high-impact events could definitely be problematic. What do you think about Brent? Well, I think that oil's in an interesting position. I do think that UK oil is always going to trade at a premium over US oil just because of the international bent. But for me right now, I sort of said I was bearish crude oil, and I'm getting that's still in bearish. We got to wait and see for that correction, though. All right, guys, here we go. XAU USD. Let's go ahead and get started here. Monthly chart. A lot of folks say, Shane, why are you looking at monthly charts? Key levels, guys. We made a key levels video out on How to Trade Com YouTube channel. Go check it out. Right there, key level, one level that you have to be looking at. If you're not looking at this level in gold, then you're missing the boat. Last month's low. It's the first day of August. First trading day of August, guys. First trading day of August. New month, new money, new problems. There you go. What's the low? The low right there is 32.68.19. I think we have an interesting potential for a breakout beneath that zone. I would be watching that relatively closely. So I'd be watching for a breakout beneath yesterday's low, or last month's low if we get it. But this gold market has just been flatlined. And when it's flatlined, you've got a real challenge. You've got a real problem there because it's tough to pick a direction. Long term, I'm bullish. Would I rather be bullish than bearish here on crude oil? Yeah, but you have to respect key levels. Be very careful around last month's low. That's going to be a big-time potential mover and shaker. 38% level, though, 3,100. That's the buy that I want. That's the buy that I'm holding out for. But, what can we really say about it? You got to wait. You got to wait. And on a monthly chart, we can't afford to sit around and wait for 3 months before we get our trade. We can't do it. All right, let's get down to the short time frames and take a look at what's going on the 4-hour chart. Now, this is very important. Take a look at where your monthly low was established. It was established, 2 days ago? All right, 4-hour chart. What do you have right here? You've got compression. Essentially, you've got compression right around this zone setting up. I'm not necessarily as worried that you're going to see a major breakout beneath last month's low, but be careful here. Last couple days, gold's been trading in a phone booth. Why do you think that is? Because we're waiting for this NFP report. Right now, I view gold as being non-directional. I'm not interested particularly in trading it on intraday time frames. We will scalp it. We will go on very, very low time frames here on our 9 EMA RSI strategy. But for right this minute, the price action doesn't blow me away. I'm sort of I'm down on gold a little bit, to be honest with you. It hasn't really opened up and given me what I like to see. However, I love converging indicators. And if you guys want a key level in gold to watch during this release, right up there, 330, 334. That's only, $33 up there. I've got a lot of indicators there. I got 38%. All right, I've got a 13-period EMA right there at 33.29, and I've also got a Bollinger midpoint at 33.35. That area right there is what I call a target-rich environment. Watch that. Watch that one. That could be a pretty darn good sell. We're going to be watching that closely as well. All right, 2 minutes to, what do we get, 1 minute? 1 minute left until we get our number. You guys yell it out as soon as you get it. I'm not going to have it in front of me. We are going to be looking, I'm going to break down the unemployment report for you right here, and we've got plenty of time. So I want to see a couple of things. I want to see revisions. I want to see this last paragraph, our revisions. They were revised up last time. I want to see if they're revised down. That's going to be absolutely huge for me. And honestly, guys, I'm not even going to venture a guess. The economy's shown to be a lot better than we thought. Interesting stuff. Steve Francis, a forecast of 106 seems low. Absolutely it does. Absolutely it does. Looking at gold. Okay, U.S. dollar, Japanese yen. Let's go ahead and take a look at that. This has been one of the big movers and shakers this week. I love this market structure. This is an according to Hoyle breakout on the daily. You can see compression right there back in mid-July. Pullback, bang. Now we're moving higher. I love this leg that we're forming right now. The last 2 days, the U.S. dollar's been on an absolute tear. Something like this. Maybe spike low, spike high. Pullback zone right there at 149.71. I'm watching that closely. Look at there it is. Right there. Okay, the number dropped right there. We're in position at 149.71. Let's see what happens. Right here. This is going to be your happy zone here for the dollar yen. What is it? What's the number? Anybody got it? They've got it. Do we have it? I'm doing the refresher. What do we got right here? Now we're going to go to short time frames and we're going to start playing. Okay, what do we have? The employment situation, July of 2025. Total non-farm payroll employment changed little. Plus 73,000. Oh, that's a brutal number. And has shown little change since April. The U.S. Bureau of Labor Statistics reported today the unemployment rate at 4.2% also changed little. It's still ticked higher. So what happened? This is a downside miss. This is a really bad number. I don't care how anybody paints it right now. This is definitely going to bring, this is going to bring the dollar doves out of the woodwork. Here's your key level right here. We've got to have a rise. I would say gold's got to be on the bull right now. We're going to go ahead and look at that as well. 149.71 key zone right there. I'm watching that closely. I'm in the dollar yen. This could be maybe the intraday bottom, but I got to tell you, a number that bad. Oh, boy, that's a bad one. 73,000, that's a bad one. So the calls for interest rate cuts are going to grow louder and louder. That number right there is getting absolutely freight trained. We could be in for a big-time correction today. I'm watching this closely. Signs that we get a little bit of compression and maybe some exhaustion right here. Very, very difficult to trade that dollar yen, though, in the midst of a number like this. But still, this looks pretty good to me. We're going to get some great opportunities to trade gold. Where's gold at? Okay, gold's going to bring our happy zone into play, and that's up there right around 33, 34. I believe we'll probably get a chance at that today. If we do, that's going to be fantastic. Now, U.S. equities, I'm watching equities futures. Those are sort of, they're deep in the red territory right now, but they are sort of showing that, that sets the stage for a session rebound. We're going to talk about that too. All right, gold's on the move. Okay, guys, let's do some scalping. Let me see. Overnight sell on the USD. JPY just hit take profit. Attaboy, yes, sir. Welcome. We love money. We ring the cash register whenever we can. This right here has me interested. If we don't get this trade while we're on the stream, we're going to have a chance potentially to get it during the U.S. session. The gold, dollar yen is falling out of bed right now, 149.47. You can't still be in that trade if you were long from 149.70. It was worth the risk, but you got to get out right now. This market is moving. Let's see if we can get some short-term trades. Who's buying the Euro USD? Great question. Euro USD, take a look at that. All right, that's an absolute explosion to the top side. Euro USD 1-minute chart. 1-minute chart right here. This is going to be the workshop that we did yesterday. I know a lot of you saw it, a lot of you didn't. 9 EMA with RSI confirmation on extremely tight time frames. We've had a lot of success trading this live for you, and we're going to do just that today. So right now, what do we have brewing in the Euro USD? We've got a tremendous break. You've got a 1-minute chart right here, which is extremely tight, very, very tight, and you've got an opportunity potentially to grab a sell. Now, in order for us to sell into the teeth of this rally, which isn't exactly the best idea right now, but we're deep in overbought territory, you're going to have to get that sell, and you get that when you get a close beneath that 9 EMA. Now, this type of market driver, you sort of have to throw your technicals. You got to respect them, but your technicals don't necessarily mean what they did mean about 5 minutes ago. That is a bad downside miss. 73,000 is bad. Hey, listen, I'm not going to sugarcoat it for you. Anything under 100,000, given as much trash as we've heard talked about job creation and all the different things that go into a booming economy, I mean, to see a 73,000 print today after getting that big GDP number, it's absolutely brutal. It's absolutely brutal. I mean, there's no other way to put it. I think that is a bad miss, one of the worst ones I've seen in a long time. The call for rate cuts is going to be dramatic. Trump is going to be all over Powell today. Just get ready, guys. Just get ready. The call for him to step down is going to be at a fevered pitch by the end of today's session. What happens to stocks, I don't know. Euro USD. So basically, to trade this strategy, RSI, overbought. We're over 70. We're looking to sell this thing. We're looking to sell once we get a bar close beneath that 9 EMA, and right now we have quite a ways to go. All right, let's go to the short time frames. Let's grab the gold chart. Gold chart's the same. Essentially, it's the same chart. Why? Because the dollar is dovish. Dollar's getting smoked. Why is the dollar getting smoked right now? Because of the rate cuts. If they might even convene Congress over the weekend and pull the Fed's charter to try to get some rate cuts here. That's no kidding. So believe you me when I say that this is going to be a big deal. This is a big deal. This is the kind of number that we're looking for and we want to trade. Okay, so right here for gold, are we topping out? Aren't we topping out? Like I said, I mean, this is the level that you really want. We just hit our moving average. Our 13-day moving average is at 33.31. We just hit that right on the head at 33.30.86. Beautiful scalp. $3 scalp right there. We're still hanging out this zone right here. If this isn't the top of the day, right around 33, 34, somewhere in this zone, if this isn't the top of the day, gold's going to explode north. And then we have to start really thinking about that 3,500 level coming into play for early next week. A lot going on today, guys. I love NFP days. They're a lot of fun. So right here on the short time frames, you can see there's no reason to trade gold, or sell gold. How about the dollar yen? Dollar yen's the opposite. Why is it the opposite? Dollar yen's the opposite because the counter currency is different. Base currency is the dollar, counter currency is the yen. What do you got? You got a plunge, yen gaining on the dollar because all the things that happened to the dollar in the last 48 hours have been erased in about the last 6 minutes. So in this instance, instead of trying to take a short of the Euro USD, you'd be looking to go long. So one way that I would think of using this type of strategy, you're saying, okay, Shane, you're trading a 1 minute, you're confusing me. You're going from weekly and dailies to, yeah, that's how we trade. We were all over the place. We're scalping on short time frames, but we never lose sight of our macro zone. So let's go back up and let's go and pull that dollar yen chart. Okay, this got absolutely freight trained up there at 38%. Now we're seeing a little bit of hesitation at 50% of that daily. That sort of tells me that, okay, I don't like 50%. Much rather be trading down here, 148.98. I would love price to come off another 35 pips or so, and then we would probably dive into this yen trade with a little bit of reckless abandon. But right now, we're at 50%. You can see why did price stop? I'm not saying the level made price stop. We're just started getting exhausted off of that initial NFP move. That set us up an NFP range, and we're going to address that as soon as we're done scalping here. So something like this, we got to go ahead and get our demo dollars up. This I tried earlier today. I was having connection issues right here. All right, we're up and rolling, so we have the ability potentially to take a long. So in this instance, dollar yen. Do I like this to the long side? Not really. We're getting smoked, but we have all the conditions we need to take a long trade right here. You've got an oversold territory beneath 30. You've got a 9 EMA with a heavy slope. If we get a bar close above that 9 EMA, then we'll go ahead and try to pick a bottom, at least an intraday swing bottom, swing low, and see if we can get long here and maybe take a few ticks. So I'm watching that closely as well. All right, another strategy that we need to look at here is going to be your 920 EMA. Your 920 EMA crossover. This is our coded version that shows you exactly when to buy. You buy on a gold bar. That's when the 9 crosses over the 20, and then you go ahead and you sell on a purple bar. That's when the 9 crosses under the 20. And if you're serious about what's happening here today and using a technical system, holy cow. Look at that predictor. 5-minute chart, the 9 crosses under the 20 and catches this dump in the dollar CAD. That's a beautiful thing, guys. That's a beautiful thing. That's what you want out of your technicals. It's not that the technicals make the move happen, because they don't. The technicals reflect past price action and what did happen. Any indicator you have is lagging. They're all lagging. But this type of trade right here, what did it give you? It gave you a stop out, and it gave you an entry point. Now, whether you could have got filled right there or not, I have no idea, but you could have got a stop loss right there. You could have gone short and absolutely crushed it to the downside. So dollar CAD, we're watching that closely on the 5. Let's pull up our Euro USD 5-minute chart. Same basic type of thing here. Big break. You've got a buy signal. Now, would we be looking to take that buy signal? I don't think so. Why? It's an NFP bar. Odds are you're going to get that retracement back down into the guts of this first 5 minutes, and that really is what we want to do with our shorter time frame. So we're watching this closely. We're up around 115.25 on the Euro USD. For me, I'll be watching right here. Our Japanese yen trade sort of setting up. Let's go back to our Euro USD. All right, this is starting to come. I won't say kill zone. I'm not supposed to say, such dramatic verbiage. I don't want to offend anybody, but you're coming right into the kill zone here. Overbought. We want to sell. We want to sell this thing. But in order for us to sell it, we've got to have a compelling reason to do so. What's our reason to do so? It'll be our technical structure here, which is what? 9 EMA, overbought territory there on the RSI. We've got to be interested in a bar close beneath the 9 EMA right here. And that'll go ahead and give us an opportunity. I have to say this, though. I do believe we're going to hit the top of that gold market here relatively soon. And that's one that we would probably want to scalp as well. So I'm watching gold. I'm watching the Euro USD. These are the ones that are in play. We're watching the dollar yen. The dollar yen's making another leg lower right now. So we're going to have an opportunity potentially to buy that golden zone. 148.98. Love it. Love it. Getting ready to buy it right now. 149.28 in the yen. You'll notice how my mind's going to all these different markets. If you guys want to be scalpers, that's probably what you're going to end up like. You've got to be able to focus. And when you're in this market for, a decade plus, your ability to focus on 2 or 3 different markets at once, it'll be there. You just got to wait, develop that savvy, and that experience can get you there. Okay, guys, here we go. I think that we're going to be into this. We're going to go right here to our order. We're going to sell. We're going to go ahead and sell at market. And we're going to sell at market once we get that close right beneath that 9 EMA. Let's take a look what's going on in gold. Gold right now, 33.33. Okay, we're sort of in the kill zone right now for gold. If we break above that 33.33 level, gold's not just going higher by a little bit, it's going higher by a lot of bit, and they're having a hell of a fight right there at that level. So we're watching that closely. Up about 1.25% on the day for gold. That really is, the dollar's flagging right now, giving back all of its gains from the week. Okay, so we're watching closely. I'm starting to really like this setup now. Say, Shane, it's a counter trend trade on a Forex pair on a 1-minute chart. And I go, yep, sure is. Think about what we have, though. We're going to have our entry point. We're going to have our stop out, and our profit target's going to be relatively simple. It's going to be down in this chain right in here, and I'm looking forward to that. Let's give that a couple more minutes to sort of set up for us. I'm still watching gold out of the corner of my eye, and there's a lot of bullish pressure on bullion right now. If that 33-34 area breaks, we're going high. We're going way high. All right, let me see. Lebo, hi there. Happy to be back. Good to see you, Lebo. Welcome. Daniel, hey, guys. Bad figures. Yeah, I'd say. Check gold. Yeah, Brian, I've got gold. I'm looking at gold right here. As far as our macro level on gold, I mean, we are in play right there. What was our top? Our top right there was 33.35. 33, 35, 36, and then we're back down to 32. Let's go ahead and break this down. Let's take a 1 minute and have a look at price action and what's happening. Guys, that's sort of the de facto lid on the market right now. That right there is why I don't play around with my macro fibbies. They are very, very good. So for a scalp, if you win on that fibby, you probably already got a little bit of money out of it. Right now, what we're looking for is two things. Number one, if we press higher, and we are pressing higher right now, there's a lot of heat on this zone. As soon as this thing breaks, then we're going to pile into this to the long. There's no question about it. But you're still in an area where you could get the price to sort of stagnate and reverse. And if that happens, then we got a chance really to pick a top of this thing and trade down. But, man, there's a lot of bullish heat on there. Pretty good scalp right here. You could have got 35 down to about 30, so that was about a $5 trade. That's pretty good. But right now we're pressing higher, and I would be very, very careful holding shorts. Probably give it another minute or two. But the extension, the explosion looks to me like you're going to trade up to 33.50 if I had to guess. This level is quickly becoming a thing of the past. So the real question is what do we want to do here? Do we want to buy it or do we want to sell it? For me, it's becoming obvious right now. Are we going higher? 33.37. Do I want to buy it? Buy it. Send them. Let's see what happens here. All right, now a couple of things that just happened. Is our trade location great? No, it's not. Are we going with the pressure, though? Are we going with the market and the fundamentals? Yes, we are. Can we get chopped up on this trade? Of course we can. What's the risk? The risk probably I wouldn't be waiting around. I mean, if we trade back down to maybe 30, I'd be getting out. What are we looking for on the top side? I think that if to place a trade like this, which is high risk, you've got to be looking for something up in the 40s. You'd have to be looking for at least 48 or 50. It looks to me like you're going to trade 50 today. Now, I'm not a psychic, and I don't know where price is going to go in the short term, but I do know that right now, as soon as our key level did not hold, probably from now till the U.S. Open, I would suspect that this bullish trend is probably going to continue. So right now, we're up in the green. I think that you have to be looking for something like 33.48 or 33.50 to the long. Will the trade cash in? I don't know. I just know where I'm getting out. If we get a big reversal come in, a big sweep lower, then I'm in a DD. I'm not hanging around. I'm not taking a position. As soon as this thing trades beneath this area and gets established beneath 33.34, then I'm back in the mindset that price has stagnated and could potentially fall. Still, though, pretty darn good little trade right now. We're up about $200, $250, $270. These are demo dollars. Remember, with that kind of market driver, reversals are possible. And we're going to set up a reversal trade probably we're going to set up a reversal trade for U.S. equities more than likely before we sign off here. I'm going to set you up the range, and then we'll take a look at what to expect out of the indices a little bit later today when the market opens in about 45 minutes. What are my thoughts on copper? ND, copper is absolutely a train wreck right now because of the tariff situation. Trump all of a sudden pulled the copper tariffs. There's just a lot going on. There's a lot going on. Let me see. Bobby Bob, no donation Friday. I have closed for the day as well for the week. NFP was crazy. I love it. See? It giveth and it taketh away. You can make a lot of money trading NFP, but you can also lose it. This is a nice little trade right now. Our trade entry is probably not the best, but we are making a little bit. I want to see that next leg up, though, for gold. Do we believe we're going to extend, or should we just get out and take the money? I mean, right now it's kind of tough just to not take the money, but we are grinding a little bit higher. We'll see exactly what happens here. Tough to buy with this trade location, but still pretty good. And if you wanted to take the cash, you could just take the cash right now and not even worry about it. Let me see. Your U.S. dollar, Swiss francs back into play. Yeah, it just sort of got stopped out, Daniel. I was sort of disappointed by that. If you didn't take the loss, it only got stopped out by a few pips. But, yeah, that was one of those that I wasn't real happy with the way it performed. The news items absolutely killed us. Absolutely killed us. Bitcoin, Ahmed, looking at Bitcoin. BTC is at 115. It's flat. So you get this. I mean, this really should drive Bitcoin back up to 125. No question about it. For me, I would be looking at a bullish bid for Bitcoin. I'll tell you what, this gold trade's looking better and better and better, though, isn't it? Once these levels go, guys, the price just doesn't go a little bit. It goes a lot of bits. So we're up about $1,000. We're up about $950. I don't know. Everybody else can wait around, but that's not bad for a little two minute foray into the markets to make a grand. Remember, these are demo dollars. However, the leverage that I use, you could easily use with a prop account, or if you had a bigger account like a $50,000 account or something like that, you could certainly do that. I recommend 1 to 3% on any given trade. However, I'm willing to look the other way if you want to bet 5%. I'm a risk taker myself, so I understand if you have a small account, you have to bet a larger percentage to try to make money. I get it. Believe me, I get it. Let me see. Wizard Alvin, I made a fair NFP trade. Thanks, Shane. Sleep time. Absolutely, Wizard. Get some rest. Get some shut-eye. Have a great weekend. Come back Monday. We're going to be ready to rock and roll Monday as well. Gold's going to the moon. I'd be shocked if we don't draw blood at 33.50. I mean, I would be shocked. All right, Euro USD. Are we going to get an opportunity? Maybe. Okay, so you can see what we're doing here. We're trying to gauge the relative strength of the U.S. dollar by looking at all these different assets. So we just looked at gold. Gold's broken out. It's broke out to the top side. Now we're looking at the Euro USD saying, okay, is this done for the day? Are we ready potentially to take a short? Yeah, according to our strategy, absolutely. What would we be doing? Sell market? We're deep into overbought territory. All we want is a bearish close beneath a 9 EMA. That's all we want. That's it. 1 minute chart. Should I still be trading a 1 minute chart here? It's starting to dry up. You'll notice how participation really is starting to dry up as the news becomes a thing of the past. 17 minutes ago, there's a couple of ways you can tell. Number one, the volume numbers. Don't depend on volume from OTC vendors. They don't have to report it. You should be looking at futures contracts if you're serious about measuring volume and trading volume. Now, if you take a good look at this, the one way that you can tell that participation is sort of lagging, look at the ranges of your bars. Okay, huge participation, huge, still pretty good. Okay, now we're starting to dry up. Okay, there's a sweep. Now we're starting to dry up. Smaller ranges. Now we're making another leg higher. This spells doom for the U.S. dollar. Right now the DXY fallen beneath 99. The dollar's going to get smoked. They're going to try to move heaven and earth to get a rate cut over that jobs number. You watch. All right, let's see. What else do we got here? Foxry. Sorry, I thought it said Foxy. Foxry. What would need to happen for the USD Japanese yen to go long? Well, we would have to have a couple technical issues sort of set up for us. For me, if I was trading this 9 EMA deep into oversold territory, I just want a bullish close. I want a bullish close right here, and I'll tell you what, this right here, this gold is really indicative of what's happening. The U.S. dollar is getting clobbered. Take a look at this. Remember that long-term level I showed you that I wanted? Didn't mean anything. These technicals don't mean anything at this point. 68% got freight train, 149. Now you're down to about 148.70. A lot of heat. The next bid, maybe 148.50-ish. I mean, there's got to be a bottom in here somewhere, right? Not necessarily. Not necessarily. Let's step back. Anytime I see a big move like this, I like to step back, lean back. That's what I like to do. I like to try to find a great big level that I can sort of play off of. My weekly chart, I don't really have much. We have a 2-week range that's very chaotic. I don't like doing Fibonacci's on ranges like this just because it's not established. This is chop. This is a picket fence. Spike low, spike high. I'm like, 147.80 maybe. Maybe you could do that. Let's go to a monthly. All right, now we're cooking with gas. I would be looking to back off potentially to this monthly chart. Not necessarily because we're going to get a key level, but, well, take a look. We do. We have a 13-month EMA in play right there at 148.50. If I was calling the bottom of this market today, that's probably what I would be calling. 148.50. Love my 13-period EMAs. Got a lot of confidence in them. Right there, though, if you're going to work your Fibonacci's, spike low to a spike high, 146.71. Probably going to be looking at that for early next week. But take a look at what's happening right here. Let's go ahead and color this blue so I know where my EMA is. Let's take it down to a 1-minute chart. Could that be the bottom? Yeah, it could be. That EMA is tough. Are we selling the Euro USD? Good question. Do we want to buy the yen or sell the Euro USD? All right, here comes the trade. Market order sell. Remember, my leverage isn't necessarily your leverage. Let's put another 0 on it, make it interesting. $100 a pip? Nah, we'll play for $10 a pip. That's realistic. All right, what do we got cooking here? Deep into overbought territory. We're looking for a bearish close on the 1-minute chart. Let's just get rid of everything else. Streamline our thinking. We want to focus. Focus up right now. Okay, what happened right here? Price came down, hit our 9 EMA, and bounced up. That's why the confirmation is so important. We've got to get a bar close beneath that 9 EMA. That tells us when we get into the market. Non-negotiable. If you're trading this strategy, non-negotiable. Now, we're already ready. We're overbought territory. The safety's off. I mean, we've taken the safety off our rifle. We're getting ready to take the shot. Now, in order for us to take the shot, we've got to have a target. Right now, we don't have a target. We've got to wait. We've got to wait for this to close beneath the 9 EMA. So let's use a fishing analogy. What just happened? Well, we're coming into some good water right here. It's time to start fishing. We're getting ready to cast. But in order for us to cast, we got to get a little bit closer to that honey hole. We got to get a little bit closer to that good water and maybe flip in there, catch a big rainbow trout or a brown trout. So here we go. We're going to give this a few more seconds, and then I'm going to move on. We've been going pretty long here. We've been going long all week, though. There's been so much to talk about. And then I'm going to go ahead and go through. I'm going to dial up the report. We're going to read it, some of the key areas, and then we're going to talk about what could happen next week with some of these markets. We're going to set up that range, too. I promised to set up a range and talk reversals as well. All right, we're going to give this one more minute to close beneath it, but you guys get the idea. You just need to close beneath this 9 EMA, and then we'll have a chance to trade. How about our dollar yen? Is that any better? Did we get a chance maybe to buy that? I see we're trading up around 148.78 now, dollar yen. Same basic formation, so we'll focus on the Euro USD. One more minute. Bring it into play. Come on, guys. Let me see, JC, the BB is closing in on the Euro NFP, the EUR NFP. Bollinger Band, yeah, it could definitely be. Not the time. If you guys are trading the Piranha strategy, which is one that we promote here in the trading room, it's not the time to be doing that. You don't want to trade Piranhas today. You'll get beat. Too much volatility. Way too much volatility. Let me see, Foxtree, thank you for your time. Absolutely. My pleasure. Ollie, man, you got a new sub. Thank you. Absolutely, Ollie. Thank you. Thank you for watching. Be sure to reach out. Ask me anything you want. You can do it over at the How to Trade channel or howtotrade.com, or you can leave me a private or a public message here underneath the stream. Well, we're grinding higher. I don't understand what's happening here. Yeah, I do. The dollar's getting absolutely clobbered. Okay, guys, let's talk fundamentals, and then I'm going to set up an opening range for you here on the I don't know. We'll use the US 500. You guys like trading the US 500. We'll go ahead and set up an opening range to really watch as we roll into the U.S. Open. All right, guys, this was a bad employment report. There's no way to sugarcoat it. I guarantee you Trump's already on the phone trying to get Powell out. Guarantee it. Will it work? I don't know. Watch Congress. Congress may spring into action and threaten to pull the Fed's charter if they don't start cutting interest rates. Get ready for those headlines. Get ready for it. All right, here we go. Employment situation summary. I already read the first part. Remember, the top line is important to a certain extent. 73,000 is horrible. 4.2% unemployment's ticking higher. Okay. Here's sort of the old trick that no one talks about. The devil's always in the details. The devil is always in the details. The last paragraph of this report is what we should be focusing on. So here we go. I haven't seen it. Revisions for May and June were larger than normal. No kidding. The change in total non-farm payroll employment for May was revised down. It was revised down by 125,000. Oh, holy cow. The change in total non-farm payroll employment for May was revised down by 125,000 from $144 to 19. That's brutal. The change for June was revised down by 133,000 from $147 to 14,000. With these revisions, employment in May and June combined is 258,000 lower than previously reported. Yeah, so where the hell did our GDP number come from? If anybody can explain to me Q2 GDP going to 3.2%, I'll give you $50 right now. You can't do that with that kind of jobs numbers. There's no way. See, I had a feeling that GDP was cooked. I was smelling recession. These type of numbers say that the employment situation's bad. That's bad. Revised down by 125,000 from $144 to 19. The change for June was revised down by 133 to 147 to 14,000. It's absolutely horrible. It's horrible. Cut interest rates right now, right? Good Lord. If anybody's on social media, what's Trump saying? I mean, those numbers are just terrible. They're absolutely terrible. So be ready for rate cuts. Be ready for rate cuts. No question about it. Powell's going to be threatened with his job. That's coming this weekend. The FOMC, they're going to threaten to pull their charter. Watch. Keep an eye on the news cycle. All right, let's go right here. US 500 30-minute chart. What do we got? What do we got cooking? Chop. That's a 30-minute chart. That's indicative of what has happened here with our NFP. This type of chart is why most traders, a lot of pro traders, won't trade the numbers. They wait for everything to settle down and then they trade. This issue, it's going to give us our range. So that would be our NFP range. Shane, why are you using the 30-minute chart? Because typically what you see during the trading day, especially with stocks, is you see the day divided up into 30-minute increments. That's sort of the traditional market profile pit trading approach. You still see a lot of traders, a lot of bigger traders trading a 30-minute chart. The 30 minutes divides our trading day essentially in half. So, if you're running from 7:30 to 2 o'clock, or 4 o'clock in the afternoon, you just double the number of hours by the number of price bars. What is there? Is it an 8-hour day? So it's like 16 price bars, 15 price bars, something like that. What we can do with this NFP range is we could say play a reversal. Now, I had a great conversation just going back and forth with a trader earlier today that was saying, Shane, what do you mean by playing a reversal? Well, you'll notice that you didn't get a directional move out of NFP, really. You got a nice head fake to the top. You sort of got a head fake to the bottom, and now we're sort of trading down a little bit. What I would say is if you were going to play a reversal, you would identify this NFP range, and you would say, okay, I'm probably going to take maybe a buy scalp from right down there just above the NFP low, and then try to get some reversion back up into this range, which is very possible. Or you could be looking to sell maybe close to that NFP high and get that reversion back up into that NFP range. That's huge. That's key. That's one way that people trade these NFP ranges. And the reason why you would do that is you would do that because you don't believe that the NFP price action is real. You believe that it's a product of just hysteria. It's a product of huge order flow entering the market. So when you look at something like this, I would say that it's not the best to be trading a reversal from because you didn't get that great big directional move. You really got chopped up here. The dollar, on the other hand, is trending. The dollar index is off 1% right now. The dollar is trending. There's no two ways about that. The question that we have now is, can we trade equities in a reversal fashion today? Do we expect equities to rally on the open? It's hard to say. I would say, given as weak as that report was, then I would expect some bidders to come in and play the backside of the dollar. Meaning, they're gonna play for the dollar potentially to keep giving up some slack, and that would make equities risk assets rise in anticipation of rate cuts. So I can build a case to go long here on the U.S. Open. However, my entry points have to be pretty good. In a perfect world, what you would love to see is this NFP bar extend way down here and maybe take out the daily low and close down there so you could grab that bid. The problem that you run into right this minute is you've got a key level down here that's more likely going to be tested. That's your daily low. That's your overnight low right down there at 6,265. So if you do go down, you got to think that is price going to test that low before rebounding? More than likely, you're going to stop a lot of people out down there. So you're already seeing the reversal sort of happen off of our low here. I would be very careful with this range. I wouldn't necessarily play reversals off of the ends of the range. I probably would wait for this market to move. I wouldn't play a breakout either. I don't know that we're going much of anywhere, but what I would do is probably wait for this market to take out the overnight low and then potentially start looking at our buy from there. Let me see, Mary Jane. Marie Jane. This is my first time seeing this live. Is this the bald guy that started this channel still around? No, he's not. He's been gone for a few years now, Marie. But he's somewhere out there. I haven't talked to him in years and years, though. He's been gone for 3 years now. So, yeah. Let me see. Foxtree, does a full candle need to close above the 9 EMA or just the wick? No. You've got to get the close. The close has to be above or below it. So, like right here, our Euro USD, I was running my mouth. Right there would have been our sell. Right there's your sell. Bang. There's your sell. Where's your stop out? Stop out's right up there. Stop out's above the swing high, right up there. It's a tricky trade. 1 minute chart, you're fighting a hell of a trend. More than likely, you're going to lose. The beauty of this, though, is you're going to have an opportunity maybe to catch the top later today. You just got to stick with it. But the other thing you could say is, how big's your loss really? 115.41 to 115.59-ish. 18 pips. That's not much. That's not much. All right, guys, I'm going to go ahead and sign off here. I've gone way, way, way too long. Let me see. Sarah, are we looking at a buy or a sell on gold as we speak? We already bought gold. We got the run up. We made the money up to about 33.40-ish, 33.42. If you're playing the 9 EMA with the 1 minute chart, you're in a short. There's your stop loss right up there, and there would have been your short trade right there. So you got good initial price action down, and now price is just sort of rotating up. That shouldn't surprise anybody. If you're trading a 1 minute 9 EMA, of course, when we got off on something else, we got the big sell, but right there was your sell. So you'd be net short right now and probably going to get stopped. So that's what I would be looking at there. Absolutely, Lewis, you're welcome. All right, guys, I'm going to go ahead and sign off here for a little while until next week. A few takeaways. Horrible jobs report. So, Wednesday you had the big GDP number and Trump was doing the Trump dance in the White House. It's the opposite today. I mean, they're breaking furniture right now. Believe it. Watch social media later today. It's going to absolutely explode. That's as bad of a jobs numbers we've seen in a long, long time. The downward revisions are as big as I've seen. Those might be as big as I've ever seen. So to say that the market overstated U.S. employment, that puts a new spin on what we think the economic situation really is. I don't think there's any bottom for the dollar right now. DXY down to 95. We're watching gold explode right now. It's going to 33.50 at least. I don't know that I'd be betting against the dollar today. Betting on the dollar. That's for sure. All right, everybody, I'm going to go ahead and sign off. Great to see everybody back. Always love these streams. A lot of folks, a lot of new faces, a lot of old faces. Remember, if you need anything at all, head on over to howtotrade.com. Send me a private message, and I will get back to you. I hope you enjoyed the stream today. We made a little bit on that gold buy, but the 1 minute scalps are still technically alive, but I don't have much faith in them. Not with that kind of market driver. All right, guys, I'm going to go ahead and sign off. You have a fantastic day or evening, wherever you may be in this world. Always love talking to the global community. A lot of fun, guys. You have a fantastic weekend. We'll be back next week. Check out the stream schedule. That will be posted probably in the next hour or so at howtotrade.com, and you can plan your trading week around the live streams. If you have any questions at all, be sure to reach out. Any comments at all, good or bad, leave them below this stream. Like I said, I love the good. I like the bad better, though. Helps us improve the streams and get a little bit better for you guys. Have a great day. Fantastic trading session. Great weekend. Trade the action well, and we'll talk soon. See ya.